Baby.
All right, all right.
All
This is
right.
now no. This is the December 6th, right? December 6th. We're gonna be back.
December 6th.
We should
Year
keep a
just flew
number
by.
log on how many live we do too. Episode number, whatever number
yeah.
we're at right now. In the title.
You know what? Starting January, we can go fresh.
Yeah, let's
Yeah, we
start
started. Yeah,
counting.
we started new numbers.
Yeah, let's start
Mm-hmm.
counting in January. Right.
Yeah, man. So we got deals going. We got deals. There's deals are flowing. I
This
just
is we are still waiting. How's your deal going there,
Yeah, I
Johnny?
presented that deal on to my investors about last Thursday.
Nice.
Yeah, so I think we were gonna, I raised $500,000 or in like 3 days or 4 days.
Cool, man.
But
Nice.
yeah, I'm gonna probably raise. I'm not gonna raise more than $1 million though. I'll keep it at about $1 million.
Yeah.
Allocation there.
Yeah.
And then that's it for this year.
Yeah.
What is that? The Houston deal, right?
That's a Houston deal, 180, man. So when you guys are, done with Donberry, we'll.
By the way, guys, we gotta announce the Houston meetup today. So I mean,
Oh yes,
yes.
I still haven't even booked my flight yet, man. I gotta book that tomorrow. I'm gonna book.
dude.
that.
You're gonna pay
No,
arm and a
we
leg.
got a cameraman. We got a cameraman because otherwise I'm gonna bring one of my guys from New York here and just
So
have him do it.
I have one of my employees. I asked her. I was almost set on her, but she can't come until 11:30 or something. That's a problem.
Oh,
No, I'm gonna bring.
Yeah.
I'll bring one of my boys, man. You guys can chip in however much.
Yeah, we
however
can
you
chip
feel.
yeah.
Oh,
Let's go.
I mean, I can find somebody else in the meantime here. I mean,
Yeah,
it's
man.
not going to be an employee of mine. I can see if I can get somebody else.
I talked to a couple of cameramen there.
I mean, we don't even need like a
47.
professional cameraman. We need somebody
Yeah,
who knows how
just to do it.
Right,
All right. Let's get going here.
right.
Let's rock and
All right,
roll.
we're back. The number one passive investing group for real estate. I'm back here. Listen, my mother. I gotta tell you this story. My mother invested $50,000 in my last deal. Now, to give you a little bit of context, right?
Congrats.
My mother is a devout Buddhist. She goes on meditation retreats. She gives her time and resources, volunteering at the temple and helping people that are less fortunate, taking care of priests, etc. She's not driven by money at all. I got the entrepreneurial side completely from my father. But being an entrepreneur doesn't mean guaranteed income. And there was times where, my father didn't have income coming in, and sometimes it's seasonal, sometimes it's economy dependent, it's business dependent. And I remember a time in the early 90s, it was a really bad recession. We lived in a city that was completely dependent on the oil sector, and it was a very low time for our family.
What city was that, Johnny?
This was in the early 90s. I would say probably about 91. It was an
What
oil
city?
crash. Yeah, the oil crash.
What
so this
city?
is
What city?
Edmonton, Alberta. Alberta's the oil,
Yeah.
the energy sector of Canada, right? So energy power. So our entire family, we depended on my mother's, income, and she was a municipal grants clerk. She was a low-level clerk for Revenue Canada. She worked for the federal government. And she was literally a E on Robert Kiyosaki's, on the poor side, as he calls it. But our family actually needed an E, because if we didn't have that, we would have nothing. And so I guess there is a time and place that, employees are needed. Because if you remember Robert Kiyosaki, he talks about it, and Kim, they said that they were home, they were sleeping in a car, at one point, because they were completely dependent on business. But my mother, she was the backbone of our family. She's a devoted wife. She was devoted to raising my brother and myself, and she gave of everything to take care of us and raise us. And, she did literally everything for my brother and myself. And she was always super proud of us. And, to this day, she watches all my YouTube videos. She watches all the live streams. She's probably watching right now. Hi, Mom, if you are, and she will be on. She watches my investor presentations. She interviews everything that I do. She watches my stuff. And on my latest one of my last presentations, she said, "Hey, I want to invest 50,000 in your deal." And first of all, I was like, "Listen, I didn't even know my mom has that kind of money, So she goes, but this is money she had saved and pension and all this stuff." And I said, listen, Mom, you don't have to invest in this deal. You know, all the support I get is just you watching and commenting. You know, that's everything that I need. I don't want, she said, no, puta, you know, puta means son in Sinhala. And she said, no, I'm not doing this to support you. I'm doing this because my money's getting eaten by inflation, and I want to get some cash flows that I can use to pay these bills.
Wow.
And I was like, cash flows? My mom, you know, my mother saying these words? I couldn't believe it. But she was watching the videos. She's watching, but she's not just watching from the perspective of, oh, there's my son, I'm watching my son. She's gaining value from this information. She understands now.
Yeah.
You know, the power of real estate and cash flows and all these things. She's been watching it and us talking about it so much that, you know, and I thought that was really cool that my mother invested. That was an interesting story I wanted to share.
See, that's a powerful story because, you know, it's never too late to get in the game. That's what it teaches me. Like, I always think, man, if somebody told me about this 20 years ago, 10, man, I missed the but now hearing that, it's, you know, just take action. Never too late. No.
You know, I always say do it now. Like, I mean, if you're thinking about the past, you know, you think about the future and think like you're in the past, and then just take action now.
Right.
Exactly.
And that's an inspiring story there, Jonny. I mean, that's awesome, man.
Yeah.
I didn't know about that. Yeah.
Yeah. And
so
we're getting the message out there. You know, that also tells us that it's what we're trying to do. We're trying to spread this same message that we've learned about, right? We've learned about this passive investing, right? And building cash flows, building wealth, while still being able to do what we do, right? Which is be our dentist and be the dad taking their son to basketball practice and, you know, raising their children and doing all the things and all of those things while knowing that your money is working for you efficiently, giving you tax advantages, cash flows. I mean, that's what it's about. You know, so today, you know, what we wanted to just compare, what we want to do is keep it high level. We want to compare and contrast stocks to real estate. And let's compare it on 5 different parameters. So the first one is cash flow. Tom, comment on, can you compare cash flows for real estate and stocks? I mean, there are ways to get cash flows from stocks, right? So we can't say there's no cash flows. So care to comment on that?
Yeah, great point. Like, so one of the things with stocks is that, you know, a lot of people right now, especially if you invest in tech stocks, there is no dividends. I mean, before, back in the day, all stocks used to pay dividends, like a monthly, quarterly. They would take half of the profits and send it out to the investors. Now, all these tech stocks, when they came into the scene, that dividends kind of went away. I mean, you have to be a utility or a telephone company to get some dividends now. So basically, you're banking on the appreciation of the stock. So Apple, or let's say Facebook or Microsoft, if you invested that money, how much is it going to be worth 5 years from now? How much is it going to be worth 10 years from now? So you're banking on that. However, what we have to understand is that when we invest in stocks, right, either you play the long-term game or short-term game. There's nothing in between. If you play the short-term game, you're most likely you're going to get burned. There is no cash flow involved. Even if you play the long-term game, unless you sell the capital, unless you sell shares, the stocks that you acquired, you're not going to get any cash flow.
There's no cash flow.
There's no cash flow.
There is no
unless you invest in companies that pay a dividend, like AT&T, right, and all that. But the problem with those kind of stocks is those do not go up that fast. In fact, if you look at AT&T's chart, somebody can pull it up right now. It's 30 years or like last 20 years. It's kind of flat.
And on top of that, the percentage is not that high either. I mean, it's in the like 4%, 5%. 4%. It doesn't even keep up with inflation.
Yeah.
So if you look at the inflation, it's 6.5% just this year. And if the cash flow is 4%, you're negative 2.5% for the year.
Right.
You're down. If you're not keeping up with at least inflation, you're losing money. That's with fixed equities, all these, you know, these whole life insurance policies and all these things that they give you these guaranteed returns. Well, those guarantees mean nothing if inflation is running rampant, which it has been for the last 3 years.
Yeah.
Right. So how about cash flows from real estate? Now compare that to cash flows from real estate.
Cash flow in real estate, any deal that you invest in is going to give you cash flow. You know why?
Well, hopefully, if you invest right.
Yeah, people. That's right. Any deal, if you invest right, you're going to get cash flow. Why? Simply because it's people are paying rents month after month, and you take a portion of that rent and send it out to all the investors, or you get a portion of the rent that's being collected every month. And why is that cash flow? Now, here's the game. Cash flow is something you get paid while you're waiting for your big payday. The payday is coming when you sell the building or sell the property or refinance the building. But until then, you don't have to wait around with nothing. You're getting monthly checks or quarterly checks from that rent, which is
You're
non-existent.
getting little drops.
A little bit drip. Yeah, drip.
Relatively,
Yeah,
but
little drip drops in out.
Yeah,
percentage-wise, especially in value-add deals, you're getting a higher percent than you would get than dividends would pay.
Absolutely.
Stocks,
And
right?
and I don't have to, and I can sleep at night. That's
You can
the
bank on that
biggest
cash
thing.
flow, right?
I
Then
can
that
I
cash
can
flow,
sleep at
if
night
it's
because I know the building is still there.
it's a tangible asset, correct?
Yeah.
So now those cash flows on top of that, taxes,
Yeah. We
cash
didn't even
flows
touch that.
from dividends, stocks, you're paying ordinary income.
Yep.
That goes directly onto your ordinary income. It flows through to your ordinary income, and you're taxed at the highest tax bracket possible, right? So that dividends, cash flows from real estate is a whole different game compared to stocks. Cash flows from real estate, you're getting tax advantage dollars. A lot of times that tax does not increase your taxable income. It doesn't even go onto your taxable income because it's reported as a loss thanks to a deduction called depreciation.
You're not paying tax on
right?
that. You're end up paying zero taxes on that, most likely.
So the cash flows, that's one thing. So now let's talk about equity buildup. Can you make money? Can you build wealth with stocks? Noel.
What? Yeah, Noel, go ahead.
I'm sure you could, but I've never invested in stocks, so I am not the expert or the best person to comment on that.
Yeah.
Let me take that then. Let me take that. Can you build wealth in stocks? I mean, I've invested a lot in stocks, and I still do a little bit because it's just, but man, the risk is like I saw a guy today, okay? His parents are wealthy. They gave him money to invest in stocks because they were actually, both of his parents are doctors. So he ended up being a CPA, but he's really no practice, nothing. All he does is manage their money. He's not that smart too. So I was walking by his desk today and he's always looking at the stock market. And he's like, man, Tom, man, the market is down, dude. And he's telling me, I mean, look at that feeling. Like it's like an everyday feeling.
It's a volatility.
Down.
Talking about it's up and down.
What's that?
Yeah. It's volatile. It's volatility. Right?
Volatility, yeah. You can build wealth. However, you got to stay for the long term. You're talking 10 years. 10
well,
years,
hopefully at 10 years, it's where you want it to be. Maybe it's 5, maybe it's 11 years. Maybe it's 9.
We don't know.
Maybe it's 14.
And
where's the bottom? Where's the top?
Yeah, here's another key thing. The equity buildup in stocks is only based on what the money you put in. But in the equity buildup in real estate is based on the value of the building. And remember, you only put 25% or 20% to buy the building. So you leverage.
Yeah, we're gonna don't go into that too deep because that's gonna be our next. That's gonna be our next point.
So that's the equity buildup. So no one can take it from there.
But the point is, you can build. There is potential to build wealth in the stock market. I mean, people have been doing it, right? If you buy stocks and you're buying value stocks, growth stocks. If you buy stocks and you stay there for 30 years,
you will make money. Yeah.
There's a potential you're going to build wealth, right? You're going to build wealth. The same thing in real estate, right? Real estate also has a tremendous ability to generate a large amount of wealth. Now, the difference between these wealth to me in the stock market versus real estate, especially when you're looking at stable assets like multifamily real estate, the stock market, you cannot do wise and prudent financial planning based on the stock market, right? So if you're like, well, I know that in exactly 12 or 14 years from now, my children are going to be graduating and they're going to need to go to an expensive college, and I'm going to need a large amount of cash to pay for their school. So you want to plan your life events around these equity events that are going to occur in your lifetime. Now you are completely dependent on the market that hopefully at that 12-year mark, at that 14-year mark, when you need that cash flow, the country hasn't spiraled off into a depression or a recession, right? If it has, now all of a sudden, maybe your kid just has to go to community college for 1 or 2 years until the stock market comes back, right? Potentially. Or for me, when I'm looking at real estate, now real estate is also tricky in this respect as well, because real estate is somewhat of an illiquid asset, but it is still able, you're still able to plan exits, times when your investments are maturing around these time periods, so that you know that you will have almost a guarantee of cash outlay. If you've built up equity, you can know that you can go to the bank and borrow money against this property in the form of a refinance, where the property can sustain that fresh new debt with the cash flow from the operations of the property. And you can still go and pay for your children's school, or if you want to retire, or all of these different things. You can do this with the tax advantage dollars, and you can do it more predictably. So that's my thing on the wealth equity buildup. Now, Tom, you were talking about leverage. I mean, let's talk a little bit about leverage. Is it possible to get leverage in stocks?
Not at all. I mean, you can do some options trading, which is super risky,
right?
But that's like really risky. I mean, you need to know what you're doing. Most people don't make money in options trading, so you got to know what you're doing. So leverage is kind of non-existent when it comes to stocks.
Hey, Tom.
Noel, did you want to take that?
Yeah, I want to ask you a quick question. So, with stocks, I hear a lot of people say they, when like for example, Amazon and Apple, when these guys, they had a share and then they split the shares so that it's more affordable. What's your take on that?
That's just
why do they do it?
It's just so you have, let's say you have a mango, right? And I'm just cutting the mango in two, and now you got it's not two mangoes, it's a mango that's cut in two. So basically the stocks, when they split it, it's the same thing. They're just doubling the number of stocks. Your value does not go up, it just stays the same. However, now a new guy comes to buy the stocks. He's not, and he looks like Amazon. Oh man, Amazon today is only $50. I only have $200 to invest. I can buy 4 Amazon stocks. So he thinks in his mind, man, I can get in easy. So more people will end up buying the stock because it's affordable. But at the end of the day, it has not done nothing to the value of the company or the shareholders. It's just the mechanism they use to split it to make it affordable.
Let's not get too into the weeds about stock splitting and stuff. I'm already
the only reason I asked was because a lot of people are like, hey, I can buy so many shares out of this investment, and with real estate I got to shell out like 50 grand, 100 grand. So they're like, hey, maybe I can buy more shares, right?
So let's talk about that. That's a great point. So the entry level to buy stocks, the investment capital required, compare that real estate and stocks.
Yeah,
easy to get in and get out. Easy to get in and get out.
Easy to get in and get out. Very liquid. Stocks is very liquid. Real estate is illiquid, right? You have to sell. It takes months for due diligence. Then the sale and all of these things people do due diligence. Well, on the whole gamut, right? Of sale, and that's hopefully if it's in a seller's market. If it's in a bad market to sell, it may take even longer for that. So it is an illiquid investment, whereas stocks, you can get in and out very quickly. Well, I need the money. I can sell and get out. But there's another side to that. It's almost, if you know that these are investment dollars that you're putting in a long-term mindset, so you know that in real estate, it's going to be an illiquid investment, but you're in for the long haul anyway. Now, if you have those same retirement dollars in the stock market, with the same mindset, like I want to grow it, but now you have the emotions. And now you can, oh, well, crypto's going to crash, man. You know, I'm going to change. I'm selling everything right now, man.
Yeah.
Right now, I'm selling everything. And people get emotional and they start selling Facebook. Oh, Facebook got a big lawsuit, Meta, you know, this, that. And people change positions real quickly. And when people trade and change positions, that's when they lose. And so we get to, you know, for me, that's a big advantage that it's illiquid, because I can't all of a sudden say I need to sell it because I'm making an emotional decision. You know, you have to remove emotions from investing. And the problem is most people have a really hard time doing that.
Yeah.
You know, so in that respect, you know, it's a two-headed coin for when we're talking about liquidity, you know, talking about liquidity. So the next part is hard asset, tangible assets. Now, stocks are nothing more than blips on a screen. There's no inherent value. It's a computer screen that's telling you, hey, it's worth this much money. You don't get any cash flows coming in from it. It's, oh, I feel good because it's worth more. And then I wake up tomorrow morning, it's down, so I'm depressed. Oh, and then the next day it's up again a little bit, so now I'm happy. And people just ride their emotional roller coaster. Right? So,
you know, it's speculation. That's what it is at best.
Yeah, 100%. It's legalized gambling.
It's nothing more than it's a number on a screen, and that can disappear, right? But real estate, on the other hand, is a hard asset. Tom said you can go feel it, you can touch it. I own that apartment building. I can look in the windows. I can see the lights are on. There's people living in that apartment. They're living in my thing. They're paying rent. I
can go on Google and find out an address.
Yeah, exactly. You know. Or if you wake up in the night and you're like, I had a bad dream that the fire was at my building, you can drive to your building and go and touch it to make sure that it's still there. So it's a physical, tangible asset. It cannot be taken away or destroyed. I mean, unless the government can come take it from you, which they could if they choose. But other than something like that happening, martial law, that's an asset that's going to be there. Even if the dollar crashes and everything else crashes, that's a thing that is physical. It has value. No matter what, because guess what? If the dollar goes away, we're going to figure out something else to trade it with. Cryptocurrency, herds of cattle, heads of sheep, you know, that sort of thing. So that's a hard asset. So that's an excellent way to diversify portfolios. You definitely don't want to, people are like, well, I'm diversified. I got money in the ETF. I got money in 401k. I got money in my IRA. I got money in, and I'm like, you know, you're not diversified at all because all your money is in paper.
In the stock market, right? It's
all market dependent. How are you diversified? If you want true diversification, you have to have real estate. I mean, that's, to me, you should be 80% real estate.
You know, it reminds me of a story that I had actually 2 years ago. So I had some capital gains in the stock market, and guess what? My CPA told me that he's like, you know what? Some of the stocks that's not doing so good, maybe you want to sell it at a loss to offset the gains.
Yeah.
Right. I mean, what kind of BS is that? I mean, why would I want to sell it at a loss to offset some of the gains? I mean, what's the advantage of that? So that was a real bummer. I mean, these are the kind of advices that people are getting.
That's why I don't play that stock
market. By the way, we need to mention about that the plan, what we are planning on bringing the expert. So relation to this, right? So if people have money,
Right,
so some of the
we're gonna get to the final topic here because we're gonna do a little short video. So the final topic, why don't you bring it in? One of you two, we're gonna talk about tax advantages of using retirement funds to invest in
real
estate. You know, instead of parking it into what we consider, and to me, a stock market casino.
Yeah, let me ask you guys, since you guys are dentists, I mean, do you think other dentists and other medical professionals and doctors have a lot of money sitting in their IRAs and 401k?
So I had money sitting there like an idiot, and I see my 401k plan, and it's gone. It went nowhere in 12 years, and I was like, I didn't even know that I could be used.
For sure.
Forced to put my money in the stock market. I don't have an
and
option.
people don't know what to
I have
do.
no
Let's
money.
talk
But
about
see,
that.
But see,
People
Johnny,
don't know.
here's the thing. You have a business, I have a business, so it's a different story, right? But I have a lot of physician friends. They are actually working in hospitals and they're in W-2s. So now
That
their
makes me
money
even
is
worse off. But even as a business owner,
right.
Noel, we still pay a lot of taxes.
Right,
I
right,
mean,
right. Not taking that away, but you
yeah,
know, we
but
still
that
have a
is
lot of leeway with businesses,
that
right?
you won't as an employee. Absolutely, yeah, yeah.
So I have a few buddies who's like, you know, working at ER and working in hospitals. Now their thing is like W-2s and all their retirement funds are 401 and IRAs. So I had a few
That's what mine
DMs
was
come in
too.
and they were asking, yeah, hey, how do I use that fund if I wanted to put it into real estate?
Exactly.
Now, you know, not being a tax expert or not being a strategist, you know, myself, I just, you know, had like a little clue, but I think it would be a good setup that we should get somebody in and who can answer some of these
Absolutely.
questions.
Yep.
And anybody hearing this, if you are in that situation where you have your retirement funds, like a Roth IRA or a traditional IRA, you want to bring it into like some sort of a self-directed IRA and a solo 401k plans. I mean, those are kind of stuff that, you know, I get DMs from some of these guys. And I think it would be a very, very good topic to cover.
Yeah, let's talk about why don't you touch on what a self-directed IRA is, and so that a lot of people don't even know what that is.
Yeah.
Did you want to? Did you
Yeah,
want
I'll
to?
just give a brief, like, or like a layman's view, like, you know, like, shoot, I mean, as much as I know. So it's just basically, it means that whatever retirement funds that you have, you take it away from your traditional, you put it into self-directed. Now you are in control of where the investment money is going to go. Now, I'm not sure about the tax implications.
Hey,
If that would,
by the way, you don't pay a penalty. You don't pay penalty. So you have to wait till a certain age to withdraw, right?
yeah.
If you transfer it to a self-directed, you're not going to be liable for that penalty.
So here's the thing. There's a lot of provisions with that because you
Yeah.
cannot manage that investment
Yeah.
yourself. And that is one of those
Exactly.
big caveats. Like a lot of these people that fall under the trap that, you know, they'll go and buy a single family or a SFR or somewhere along those lines where they are now managing the whole thing. The problem is it has to be passive. So when we are talking about passive, I mean, you know, it's all about tax strategies. And I'm no expert on this, but I would definitely, you know, we would like to call the expert on this live and maybe like throw a few pointers out. How do we take self-directed and go into real estate, or how do we take self-directed, go into a solo 401k plan and then go into a real estate? So there's different ways that people can, you know, talk about that.
Yeah, and actually, you can use the self-directed IRA to buy real estate, and the money grows tax-free in the self-directed IRA, just like you buy stocks. So that's not the only option. Sorry, buying stocks is not the only option. You can take that money that's sitting in the IRA or 401k, move it into a self-directed IRA. You need to have a provider who can do this.
Yeah.
That's what we're going to talk about. And
Like a
then
custodian kind of
custodian,
provide.
right?
Yeah.
And then you can decide which property you can invest in, and you can get the cash flow, all these things, same advantages of tax-free growth, just like you get in an IRA.
Absolutely.
Yeah.
Absolutely. Maybe we should have our, you know, in a couple of weeks, like maybe after the holidays, to get an expert on this topic and let's shed some light on this for our group.
Yep. Absolutely.
Yeah, I agree. I mean, I did this. I actually, so I'm the same thing. Every dentist, we're in that all the players in the game from the time we graduate, from our accountant to our attorneys to our financial advisors to everybody, they put you into these vehicles.
Oh yeah.
Lock you into the stock market. You don't even think that there's an option. I had no idea that I had control over think about it. You get to actually have control over what your retirement dollars invested. Imagine that. You can have control over what your own money is, what you can do with your own money. So initially they put you into the stock market, right? IRAs, all those things, all those vehicles, SEP IRA. I had a SEP IRA.
Yep.
They put all that money into the stock market. And then I learned about it's, you know, there's a self-directed IRA is one vehicle. Another vehicle, which is called a qualified retirement plan, is called the EQRP. You'll never be told about it by a financial advisor, right? Because there are no custodial fees. You're not paying any of those fixed expense ratio fees. There's no management fees because there is no manager.
Yeah.
You are the manager. So now in this EQRP, I have rolled over all my money from the SEP IRA. It's a like-to-like plan, right? So you're moving from one retirement vehicle into another retirement vehicle. So there's no penalties. There's nothing actually happened except you're moving it from one account to another that are the same thing. So I moved it out of the SEP IRA into this EQRP. Now, all of a sudden, I have a world of opportunity awakening. The whole world of private offerings is now open. The door to private offerings opens up. Whereas before, I'm locked in the stock market. Now, all of a sudden, I can take my retirement money and I can invest in cryptocurrency. I can invest in flipping houses. I can invest in land. I can invest gold, silver, physical gold and silver that you can keep in your house in a safety deposit box, or you keep in a safety deposit box, or you can even keep in your own house. You can, with your retirement money, you can buy physical gold and you can buy real estate. You can buy syndications.
And they grow tax-free, just like the IRA.
And that's the thing. So now I just invested. We bought it. You know, there's a deal I invested in as a limited partner. And now that's money from my retirement account goes, I wire the money directly to the sponsor. And now I'm getting cash flow distributions. The cash flow is going back into my retirement account. It would be tax-free anyway, but it's tax-free. Now that cash flow is accumulating again in my retirement account, so I can put it back out into another syndication and re-employ that money. You increase the velocity that your money is increasing, and you get the compounding effects. Otherwise, it's dead equity. It's dead equity if you just have stocks and it's gone up in value and you're not selling it back and putting it back out there, right? It's just sitting there. With the real estate, you're getting it back in the form of cash flows. Even when that syndication matures in 3 years or 4 years from now, and I get back that 100K and now it's 175 or 175,000, that 175,000 goes back into my retirement. I started with 100, now I got 175. It's back into my retirement account, completely tax-free. And now I can go and reinvest that into more syndications that again will build cash flows that flow back into my retirement account. And then the next year I contribute some more retirement money from my earnings. And then the money that's already growing keeps growing. And it starts to grow, snowball very quickly. This is what you can do if you take control of your own retirement money. Instead of getting eroded by management fees. The only people that get rich in a 401k plan are the 401k managers.
3%, right? whether you make a profit or not. 1%, right?
They're taking that money. Right now, the stock market's down.
But guess what? They're getting their 1%.
They're taking their cuts. For what? For losing money, they're still taking a percentage. Right? So they're actually taking from your principal now. They're not taking a percentage of profits. Oh, we earned this money for you. Now we earned a percentage of this. That's a different story. Even when you lose money, you're paying them a percentage.
Right.
So
now
Jonny,
you have to sell stocks at a loss to pay the guy.
There's no alignment of interest.
Yep.
So Jonny, so here's a question for you. Last question here for you, right? So your money is in the IRA, but you're not dependent on the market, but you're making it work because you are managing the investments. Correct?
Correct. That's exactly right. So now what I've done with mine, I've invested it heavily. Now my retirement money is invested heavily in multifamily real estate. I also have a small percentage in cryptocurrency. I'm still a believer in Bitcoin. I still say buy Bitcoin even right now while it's down, but that's not what I'm telling you to do. But that's my speculative money. I have a small percentage allocated to risky investment, but 80% goes in low risk, cash flowing assets with strong fundamental. That's 80-20 rule of investing. You put 80% into the boring stuff, the one that grows your wealth every day of the week, every night you go to sleep, you wake up, every day of the week your wealth is growing up, that kind of stuff. Then you can, if you want to do a little bit more speculative things like flipping houses or, those type of things, buying land, or investing in somebody's pizza shop in the corner, whatever you want to do. And, you do with speculative money. But I do that with my retirement money, and I'm much happier. I'm in control. I'm not paying fees. There's, and my money's actually growing, and it's all growing tax-free. I mean,
Love it, man. Love it.
This has been life-changing for me, honestly.
Yeah, man. I mean, that's awesome. So that's good that we are going to have the guest who will come and talk about that. Let's plan on that. And get some people.
Sounds good.
Guys, you want to make a quick announcement before we hop off for this coming Sunday?
Yeah, guys. Hey, guys, if any of you are in Houston, actually in Texas, okay, we are going to have a meetup in Houston this Sunday. Noel, Jonny, myself, we are going to be there. We are going to be at a property that that we purchased with a bunch of partners. This was actually one of my first actually the first deal this year, I think. So it is in a great area of Houston. Thank you. So we want to show you the property, do a walkthrough, maybe around, not going in, but like around, talk about how many units, what the deal is like, the area, and then do an analysis. But the whole bottom line is we want to meet you guys. Noel, Jonny, myself, we would love to connect with you guys. And
if you're in the Houston area, definitely.
Yeah, and then
hey, isn't that the same deal? Isn't that the same deal you pitched with Grant Cardone?
Yes, that was the deal that I pitched to Grant Cardone on the Real Estate King show. Yeah.
Awesome, man. Awesome.
Nice, man.
So would love to this Sunday at 9. What time did we say?
We're planning around like a 9 between 9 and a 10 a.m.
Let's do 9 and 10, and then we'll put all the location details in the Facebook group. Okay.
Awesome.
What's up? All right,
Jonny,
guys.
you got to book your flight, right?
I got to book my flight still. We'll be in Houston. Probably,
Noel's already ready to go. I'm
going to be actually there Saturday as well, because I'm going to be doing an asset management kind of look at some of the properties that we acquired this year.
Cool.
And then Sunday we'll be doing a meetup.
Yeah.
And
somebody just said maybe you all could do a video of high-level narration about the property. Actually, that is a plan. So we will be doing a high-level video and walk through and all that, and then talk about that deal actually.
And then Johnny's got a cool deal down in Houston. So just saying.
You gotta check that out.
Just saying. Yeah.
I didn't say anything. Read between the lines.
All right. Cool.
Sounds good.
Awesome,
you
guys. Yeah.
Great call today.
All right, let's wrap it up.
We'll wrap it up. And thank you from the group. We'll be back next Tuesday live again. And until then, live free, live abundant.
Adios.
Take care.
All right. Cool, guys.